Elon Musk's space package is $1 trillion. That's the headline everyone saw, but it's not a cash payment. Tesla shareholders just approved it. This plan gives Musk 424 million shares. He gets them only if Tesla hits massive growth targets. These goals are both financial and operational. It's designed to make him create enormous shareholder value. If he fails, he gets nothing. Tesla's market cap must reach 1.5 trillion by 2035. That's more than doubles Nvidia's current value. He also needs 10 million full self-driving subscriptions. These are truly ambitious targets. Now let's look at the numbers. The lowest market cap milestone is 2 trillion. That's a 32.5% increase from today, given Tesla's current valuation, which is approximately $1.51 trillion. The stock price would need to hit 550 per share. Each of these 12 milestones builds on the last. The highest market cap target is 8.5 trillion. Tesla's stock would be over 2300 per share. To put that in perspective, Nvidia recently hit 5 trillion. Tesla's top target is 70% larger than that. Sustaining these market caps is also key. It's not about a quick pump. The average must hold for 6 calendar months, then for 30 consecutive days. This prevents short-term speculation. It demands real sustained growth. Operational goals are just as huge. There are 4 product-based goals and 8 earnings-based goals. Each one is tied to a market cap target. He needs both keys to unlock shares. Consider the vehicle deliveries target. Tesla aims to reach 20 million vehicles. By Q3 of 2025, Tesla has already delivered approximately 8.5 million vehicles. They are on track to deliver an additional 500,000 this quarter. This leaves them needing around 11.5 million more vehicles over the next decade. This translates to an average of 1.1 million vehicles each. Over the past 3 years, Tesla has averaged more than 1.5 million vehicles annually. This target is often called incredibly weak. Fortune magazine highlighted this. It's considered the easiest of the product goals, a relatively low bar, but it still contributes to unlocking shares. 10 million active full self-driving subscriptions. Active means daily use for 3 months. Tesla has about 1 million FSD users now. That's 12% of their current fleet. He needs to 9x that number. That is a very ambitious target. The 1 million Robotaxis goal is a huge challenge. This means vehicles operating commercially. They must use full self-driving. No human driver allowed. Currently, Waymo operates 2,000. Tesla has only a limited pilot in Austin. Brett Winton from ARK Invest wrote one. He said it was amazing and magical, but Waymo's cost basis is high, around $3 per mile. Tesla aims for a scale advantage. They produce thousands of cars daily. Also, their upcoming Cybercab could be key. It's designed without pedals or a steering wheel. Production target is April 2025. This would give a cost per mile advantage. But getting to 1 million is still a moonshot. Could private owners opt into the network? If so, it would greatly simplify this. It could expedite the goal. It's a legal interpretation question. This could be a loophole or a genius plan. It could expedite the goal. It's a legal interpretation question. 1 million humanoids void delivered. Bot means any physical AI product. It includes Optimus, the humanoid robot. Vehicles are specifically excluded. This target is an entirely new business for Tesla. Musk calls robots bigger than the car business. He plans to scale Optimus assembly. Fremont factory first, then Giga Austin. Katie's Wood ARK's Invest sees this shift as a huge opportunity. Her fund believes it's an order of magnitude larger than Robotaxi's opportunity. But they also acknowledge Elon time, meaning the timeline can stretch. The challenge is huge. It requires massive investment, especially in AI compute and hardware. Musk even mentioned a Tesla teraflop. a gigantic chip fab for AR hardware. This would address supplier limitations. It shows the scale of his ambition. This goal is far from certain. It's a speculative bet on the future, but let's continue with the targets. The earning-based milestones are also staggering. They range from 50 billion to 400 billion. This goal is adjusted EBITDA. Tesla's highest annual adjusted EBITDA was 19.2 billion. That was in 2022. This year, they're on a pace for 15 billion. So the highest target is 25 times the current pace. Katie Wood notes that no company this size has delivered a 41% CAGR for EBITDA, not over 10 years. This shows the extreme difficulty. It demands unprecedented profitability. It's another borderline impossible, but if achieved, it means immense value. It would justify the compensation. The company would be a profit machine. Let's say it clearly. If Musk achieved these goals, it would be impossible not to recognize his achievements, whatever feelings one has towards him. If he achieves this goal, I think this would make him the Henry Ford of our time, a great entrepreneur with extreme beliefs. This agreement isn't Tesla's first pay package. A 56 billion plan was awarded. It was worth 44 billion at a later shareholder vote. The earlier plan tied Musk's pay to aggressive goals, market cap and operational milestones. It successfully boosted Tesla's share price. Many called it a wonder. But the 2018 package faced legal issues. A Delaware judge voided it in January 2024. The ruling said compensation was excessive, and the board failed to inform shareholders. This legal setback forced a new plan. The 2025 compensation plan was the result. It aims to address those legal concerns. The 2018 plan used to use stock options. The new plan awards restricted common stock. This detail is a key difference. Restricted stock gives full voting rights. Each tranche comes with voting power. This aligns with Musk's stated goal. He wants voting control, not just wealth. He wants influence to pursue his vision, especially for his massive robot army. It gives him direct power, not just potential wealth. The offset amount is also crucial. It ensures Musk's pay is incremental. He only profits from stock appreciation. This design feature is deliberate. It ties compensation to new value. It prevents him from profiting on the baseline. This vesting period is very important. Vesting means getting paid with shares in a planned timeline. Shares vest between 7.5 and 10 years. The timeline depends on when goals are reached. He must remain in continuous service. This means staying an executive. If shares are earned within 5 years, they vest on the 7.5-year anniversary. If earned after 5 years, they vest at 10 years. But there is a strict forfeiture clause. If all 12 milestones aren't met by 10 years, all unvested shares are forfeited. This includes unvested earned shares. It means he could get nothing, even if he hits 11 out of 12 goals. This creates huge pressure. Elon needs to hit goals quickly, especially in the first 5 years. This secures earlier vesting. He must also hold vested shares for 5 more years, so no selling until March 2038 at the earliest. Here is an interesting insight from Fortune. Some lower tier goals seem easy, like the 20 million vehicle target. It includes 8 million already sold. This makes it incredibly weak. But this creates a strange incentive, even without truly transformative results, but the full package needs a revolution. Here is how this package actually works. The package is structured with 12 tranches or parts, 12 payments. Each part is 1% of Tesla's shares. To earn one, two things must happen. Tesla needs to hit a market cap milestone, and it needs to hit an operational milestone. These are like separate keys. You need both to unlock the shares. For example, a 2 trillion market cap plus the 20 million vehicle delivery goal. That would unlock one part. The milestones don't need to happen at the same time. The shares are earned on a later date. The dual key structure is critical. It ensures performance on two fronts, both valuation and tangible progress. It's not just a stock price, it's about real business growth too. Once shares are earned, they don't vest immediately. The plan is not a quick payout. The vesting period is 7. It depends on when the goals are earned. If earned within 5 years of the plan start by September 3rd, 2030, they vest on the 7.5-year anniversary. That's March 2033. If earned after 5 years, they vest at 10 years. That's September 3rd, 2035. It keeps him engaged with Tesla's long-term future. The forfeiture clause is a huge motivator. This pushes for full completion. It's an all-or-nothing incentive. It forces quick action in the first 5 years. This secures earlier vesting for some tranches. He also must hold vested shares for 5 more years. So no selling until March 2038 at the earliest. This plan maximizes shareholder value. It significantly reduces shareholder risk. The offset amount is often misunderstood. It's not just receiving shares, it's about incremental value. The plan's grant date was September 3rd, 2025. The stock price on that day was $338 per share. It's the baseline value. As compensation is reduced by the value of shares at that, he only gets rewarded for value above that price. If the stock price doesn't rise or if it falls below 334, he gets no compensation from that part. He must increase the stock price. He can't just coast on the current valuation. The number of shares he receives is adjusted. This arrangement is complex as you cannot control where the market goes. Even when a company provides results, just look at Adobe or at PayPal's stocks. So this new structure directly supports his goal. It increases his stake to 28% from about 13% currently. A common mistake is the $1 trillion headline. People think he's already $1 trillion in cash in his account. That's simply not true. It's the potential value of the shares. If Tesla hits all goals, if Tesla hits all targets and the stock price gets astronomically high, this compensation is paid in stocks, not in cash, and it's spread over many years, with strict vesting and holding periods. Gautam Mukunda, a lecturer at Yale School of Management, makes a strong point. Musk would be a trillionaire anyway if Tesla hits these targets. His existing 13% stake would be worth trillions. So this package gives him a second trillion. Makunda questions, what can you buy with 2 trillion that you cannot already buy with 1 trillion? This highlights the scale of the package and Mukunda's criticism. It's unprecedented in corporate history. It's not just about incentivizing some investors who think this payment is too high. Also, it raises questions about fairness, about corporate governance. It asks whether the board did its job, whether it's independent from him. These are valid points to consider. Tesla's board strongly backed this plan. Robin Denholm, the chair, spoke out. She warned shareholders against rejecting it. She stated Musk's leadership is critical. Without proper incentives, he might leave. Tesla could lose his time, talent, and visions. This argument resonated with many, especially those who saw Tesla's stock drop in 2022 during a period of reduced focus. The board believes this plan is essential. It keeps motivated. It pushes Tesla into new frontiers, areas like AI and robotics. They see it as a vital opportunity for future growth. It's about securing its vision and tying him to Tesla's success. They view it as a pragmatic and sensible approach, aligning his return with shareholder value, unlike nonsensical pay for other CEOs, those who don't add value. This was the board's strong public stance. What about the skeptics? Many ask if any CEO deserves this, even if targets are met. God Makunda from Yale, he acknowledged Musk's past achievements, pushing electric cars forward, being a pioneer in this field, inventing the modern space industry, but he questions if he can do it again. Makunda says Tesla's valuation entirely depends on Musk. He calls it a cult of personality. Investors believe Musk has magical powers. If you believe that, you would vote yes. If not, it's a huge gamble and something the board isn't managing him. They're just giving him what he asked for. And that's Makunda's view. He says the board acts like bobbleheads. This raises serious governance concerns. It suggests a lack of independent oversight. A fundamental objection you would have to analyze. Are these goals actually achievable? Critics say no. Makunda points to Tesla's product launches. No successful new car in 5 years. No immediate prospects either. He also highlights AI and robotics. Tesla isn't the leader company in this field. He says the evidence is only Musk's words. Supporters like ARK Invest disagree. Brent Wilton, chief futurist at this firm, says robotaxis are magical. He says he has ridden them in Austin. He believes they will produce marvelous cash flow and it will produce a natural monopoly. This due to Tesla's scale advantage that can produce a lot of. He acknowledges a hard and steep climb for humanoid robots, but believes they will commercialize by 2029-2030. This is a huge divergence of opinion between the analysts. It comes down to belief in Musk's vision and Tesla's execution capabilities. The market is clearly split. Another concern is shareholder dilution. The package grants $424 million in new shares. This increases to 28% from his current 13%. This means existing shares become a smaller piece. Norway's sovereign wealth fund objected. They hold at 1.2% stake. They cited total size of the award dilution and lack of mitigation of key person risks. This is a huge issue. Tesla's value is heavily tied to Musk. If he leaves, the stock could crash. The board argues the package mitigates this by incentivizing him to stay, but critics say it exacerbates it. It makes Tesla even more dependent on one individual. If he loses interest or leaves, it's a double-edged sword. Third largest retail Tesla shareholder, Leo Kogan, has also opposed Musk's pay package. The largest shareholders, including Wall Street firms, Musk himself, and Oracle's Larry Ellison, approved the pay package. Morgan Stanley also approved it. The Delaware court voided the 2018 package plan. It cited shareholder information and excessive compensation. The new plan tries to address this, but critics like Makunda remain unconvinced. He sees violations of corporate governance, so it wouldn't be strange this pay package also gets sued. The analyst, not everyone in Tesla approves everything. For example, the XAI investment vote is an interesting example. Shareholders approved it, but many abstained. But then the board decided to reevaluate. Some commentators believe the board is lukewarm. Some saw an overlap between Tesla AI and XAI. That was probably a hint of pushback from the board, even if shareholders approved it. It remains a question whether the board is independent. If you're a long-term Tesla shareholder, you likely believe in Musk's. This package reinforces his commitment. It ties him to ambitious future growth. It's a bet on his ability to innovate. You probably voted yes. Continue to monitor the milestones. Watch for progress on Optimus and FSD, full self-driving. Understand the forfeiture clause. It keeps him highly motivated, but also understand the risks. The Elon time factor is real. Timelines often get pushed back. Be prepared for volatility. Your investment is tied to moonshots. It's not a safe, steady. If you're a skeptical investor, you're concerned about valuation and corporate governance. This package probably makes you nervous. The trillion-dollar headline is misleading, but the potential for dilution is real. The dependence on one person is also a risk. Consider if the reward justifies the risk. Even if goals are met, is it fair? Look at Tesla's fundamentals. Its PE ratio is 326. Its EBITDA is declining. Fortune calls it vastly overpriced. Compare it to other tech giants. This suggests caution is warranted. Diversification is always wise. Don't put all your eggs in one basket. If you're an investor considering Tesla, understand what you're buying into. It's not just an EV company anymore. It's a bet on AI, robotics, and autonomy. Do your own research thoroughly. Don't invest more than you can lose. Consider starting with a smaller position or look at broader tech ETFs that include Tesla. This reduces single stock risk. Tesla is a high risk play. If you focus on traditional metrics like P ratios and EBITDA, Tesla might look overvalued to you. Now let's look at the large picture. I believe the goals are so ambitious because Tesla shareholders want Elon to have less time to tweet and spend on extreme right politics and instead return to his genius. Yet Tesla has faced a strong backlash in support of Trump administration and his participation in Doge, which slashes human rights and health spending around the globe. Such brand damage could make it harder to achieve the goals. Also, we'll have to see whether a possible democratic government after Trump could go against his companies. Inequality claims are also pushing against him regarding the pay package. Objectively, it's impossible to justify that one human gets paid all this much and gets even more power. Whatever happens with Tesla, Musk will be still rich. Just look at the possible Starlink IPO over 1.5 trillion, current Tesla's market cap. He doesn't exclusively depend on Grok AI is growing a lot and it's performing as well as the top LLMs in many. Also, he got to know the state from inside during his Doge job. Moreover, with Grok, Starlink, and the Optimus robots, Musk could also build a data collection and surveillance nightmare, only comparable to that of his former PayPal partner Peter Steele Palantir. Of course, this would be huge for his company's share. It would grow a low competition, high moat. So, what's the takeaway? For my portfolio, I see this Tesla plan as a high stakes gamble. If Musk pulls it off, shareholders win big. If he doesn't, he gets nothing. But investors could still be left holding an overvalued stock. I'd keep an eye close on the operational milestones, not just on the market cap. Those are the real indicators of tangible progress. The robotaxis and bot deliveries are the big ones. And I'd remember that Elon time means patience is key. This is a long game, not a sprint. It's a bet on a future that looks almost impossible. But if anyone can do it, it might be him. Just know the details and manage your risk accordingly.